Hi, I'm John Moran. I'm a CPA in Denver, Colorado, and I'm here to talk to you about Social Security by the numbers. The first topic is eligibility. How do I qualify for Social Security? The basic way to qualify for Social Security is to have worked for 10 years, and you could simply look at your W-2 or your employer withholding statement to see if they withheld FICA tax. There are some employees who do not qualify for Social Security, but the vast majority of employees in America are eligible for Social Security once they've worked 10 years. The next question you might ask is, well, what if I didn't work? What if I was a stay-at-home mom? It is possible for spouses to be eligible for Social Security benefits. And I'll talk a little bit further later about that actual benefit. But as long as you were married to someone who did qualify for Social Security, and you were married for, and that individual worked for 10 years or longer, you do qualify for spousal benefit. Finally, what if my spouse passed away and is no longer alive? Well, you still may qualify for Social Security benefits, and widows and widowers who are married to someone who is eligible for Social Security do qualify for what's called a survivor benefit. And we'll define and explain some of that terminology a bit later. Well, I identified that if you were married to a spouse who did work and was eligible for Social Security, that you would be entitled to a spousal benefit. So let's define what spousal benefit means exactly. A spousal benefit is approximately 50% of the full retirement benefit that your income spouse earned or is entitled to. And that amount qualifies you for a benefit beginning at age 62. It's reduced if you are less than full retirement age, and full retirement age being 66 approximately now. It is rising until age 67 as we speak. But let's say for all intents and purposes that the full retirement age is 66. So you will receive as a spousal benefit approximately 50% of your income spouse's full retirement benefit. And that's an interesting concept a lot of people don't realize, but it is built into the Social Security rules. Secondly, let's talk a little bit about restricted application. And a restricted application is a little known area that allows you to potentially claim a spousal benefit and let your worker benefit continue to rise. Now, Congress and the President have enacted rules that preclude anyone who might be eligible for a restricted application. It's now limited to those who were born before January 1st of 1954. But with a restricted application, it is possible you could claim your spousal benefit, again approximately 50% of your income spouse's benefit, and let your worker benefit continue and rise until age 70. And we'll explain more why delaying Social Security benefits on your worker benefit is advantageous to you in the future. Now let's explain a little bit about a survivor benefit. A survivor benefit exists when your income spouse is no longer alive, has passed. As a survivor under Social Security rules, you step into the shoes of that former spouse. So if the former spouse, for example, was receiving $2,000 in benefit, and perhaps your spousal benefit was $1,000, you would then request a survivor benefit, stepping into the shoes of your income spouse, receiving $2,000 a month, but you do lose the spousal benefit at that point. Well, let's talk a little bit about full retirement age and what that really means. Remember that the Social Security is a federal law, so there's a lot of terminology and a lot of things we need to cover in explaining Social Security. One of them is the full retirement age. It represents the base or the standard. It kind of defines the age in which you are really eligible for Social Security. And the full retirement age at present is age 66. Now that's scheduled to rise over the next few years to age 67. But again, it becomes the base. Social Security refers to it as the primary insurance amount. And it establishes, based upon your earnings, how much Social Security you're entitled to. You can claim Social Security benefits beginning at age 62 typically, but those benefits will be reduced if you do claim early. So the starting point is really full retirement age, again age 66 rising to approximately age 67 over the next few years. So what dollar benefits can I expect as a Social Security beneficiary? In the United States, the typical Social Security benefit is approximately $1,400 on average for most workers. In the case of households, due to the spousal benefit and worker benefits, if it's a two working spouse household, that benefit is approximately $2,200 on average across the United States. Now, Social Security was designed to be a supplemental source of income, and so typically Social Security represents approximately 40% of your normal retirement living costs. Unfortunately today, for many workers who do retire, Social Security represents 100% of their household income, and that's a potential public policy issue we'll have to address. Now let's discuss briefly some of the planning strategies surrounding Social Security. The first strategy would be to delay as long as possible the receipt of Social Security benefits. Built into the law is the capability to earn an additional 8% a year from age 62 until age 70. Because the thinking was that if your Social Security benefit over your retirement years should be the same whether you claimed early or whether you claimed late. In today's economy, an 8% increase is not possible in most commercial annuities that you might purchase, so delaying represents a significant planning opportunity. The second planning opportunity is to realize Social Security benefits will not stop. So as long as you're alive, you'll continue to receive Social Security benefits. Really, in other words, you can't outlive your retirement income or your retirement assets, which is a significant concern of a lot of people reaching retirement years. The third planning strategy would entail knowing more about your medical history. What is your unique genetic makeup? If you don't feel like you'll potentially live until your late 70s, then perhaps it is best to claim Social Security early and begin that benefit. The next planning strategy would involve taxes. So in a nutshell, Social Security benefits at most are subject to income taxes at an 85% inclusion rate. Compare that to every dollar of retirement income that comes in through an IRA or through a retirement account of some kind is subject to tax. So again, let me reiterate that. At most, 85% of every Social Security dollar that you take in is subject to tax. Compare that to every dollar of retirement income coming in from a retirement account is subject to tax. So perhaps you want to consider taking retirement account income sooner and let that Social Security benefit ride and be subject to a lesser tax later in life. Overall, too, remember that Social Security benefits are not subject to tax at all if your household income is less than $25,000 if you're a single person, or $34,000 if you're married and file a joint return. And finally, the other planning strategy would be to seriously think about the benefit that might be left to your survivor, to your spouse who outlives you, especially if that spouse does not have much of a worker benefit record. Because again, they step into your shoes once you pass, and there are cost of living adjustments available to that surviving spouse. So it's best to consider delaying benefits as long as possible also for your surviving spouse, if that surviving spouse is eligible or potentially eligible for that survivor benefit. The next topic we want to talk about is what happens if I keep working? Well, if you work past age 66 and begin claiming Social Security benefits, there's no impact whatsoever. But if you begin to claim benefits early, in other words, you're between age 62 and your full retirement age, Social Security will reduce your benefits by $1 for every $2 that you make over approximately $16,000. That amount's going to be adjusted from time to time. Well, what does that really mean? It means as your income exceeds $16,000, then they will reduce your Social Security benefit by $1 for each dollar you earn above $16,000. Eventually that amount will equate to a monthly benefit check that would be paid to you. And so what they will simply do is withhold payments once they determine that your income has exceeded that $16,000, again, by $1 for every $2. So there could be a few months where you do not receive any Social Security benefit. And I know that's a little bit confusing, but that's not all that detrimental, because in those months when you don't receive Social Security benefits, that'll entitle you to additional work history credit, and ultimately that amount withheld will be paid back to you when you do reach full retirement age. So it's not that detrimental, and often you hear, I cannot work because it would reduce my Social Security benefits. I would discourage that, because you will get those benefits. It may be just a little bit later date, but you won't lose them forever. Finally, what additional resources are available? Well, remember, Social Security maintains a complete informational website, and their website is ssa.gov, and it contains a wealth of information, and we'll reiterate some of the points that I've been drawing out for you today. A second major resource is a gentleman, a professor at Boston University, who writes extensively on Social Security, and his name is Lawrence Kotlikoff. His last name is spelled Kotlikoff, and he produces publications, and he's quoted often in business and economic newspapers and magazines about Social Security. So that would be a second source. And do contact me. For the purpose of this video, I'm John Moran. I can be reached at 720-635-3180 or on my website at moranlong.com. Thank you.